ETF inflows and outflows. I want to show you something, and hopefully it will be the last time you ever need to think about it or talk about it. So towards the peaks of the markets, whether it's the high peak or the low bottoms, you're going to see an influx of analysis surrounding on-chain analysis and ETF inflows and ETF outflows. My view on on-chain data and ETF inflows is to always do the opposite of what you see. In a nutshell, this data is completely useless when it comes to forecasting the trend or the next direction in the markets. And I'm going to show you this. I'm going to break it down. So one would expect, let me just show you this. I will put this website in our lesson. I'll put it in the chat right now, actually. So this one, what you're looking at is the yellow bars. So the yellow bars, when they're high, it shows the inflows. People are buying ETFs. And when it's down, when the yellow bars are down, it's outflows. That's when people are selling ETFs. Okay, so inflows is buying, outflows is selling. Now, one would expect that when you see inflows, meaning when you see people buying the Bitcoin ETFs, that means more money's coming in. You would expect that. This means the run is just getting started. So you would think these high ticks to the upside, where we got a lot of daily ETF buying for those days, you would expect inflows equals price increases. And oppositely, for these kind of days, see how it's like negative to the downside? So these were outflows. 9.7K, 9,700 ETFs were sold this day. So you would expect on these days that price would decrease in Bitcoin because people were selling BTC ETFs these days, so you would expect BTC to decrease in price. However, let me tell you, what we actually see is the complete opposite. So let me say this again. Any analysis that focuses on ETF flows as a way of determining where the market is going to go next is absolutely useless. Now let's do some demonstrations. So, which one should we start with? Let's do outflows. This one sticks out. Okay, May 1st. I just clicked on it. You should see it in black now. May 1st, daily ETF flows, negative 9.7K. So 9,700 outflows. Let's see what happened on the charts. Scroll to May 1st. Where are we? Check this out. May 1st. Let me zoom in so you can get a better view. May 1st. Right here. You can see on the actual charts, we got a significant low on May 1st and May 2nd. This was a significant low, and it didn't break this low until July. So that was 2 months later. From this low, May 1st, May 2nd, the next time we went that low was 2 months later on July 5th. Now, most outflows happened on that day, but that day was actually the low in price. And after that low, the market rallied to 71K up here. So if you want to measure that, whoops, where are we? That's a 27% increase. So from the day that we saw 9,700 ETF outflows was actually the low, and price rallied 27%. So the masses are usually wrong around the lows and the peaks. Let's go back on this. Next one, let's look at the next highest outflow. I think that's this day. Yes, okay, September 3rd, 5,000 outflows. Let's check the charts. Where is September 5th? Look at September 5th. We got a low coming on BTC on September 6th, 7th, 8th, that area. And that was around 52K. The low was around 52K on September 6th, 7th, 8th. And then it rallies from this price to the next highs for another 27% increase. Remember, from that highest ETF outflow day on September 3rd, from that day, it went another 27% increase to the upside to 66,000 per BTC. Okay, I'm not done. Next one, let's see. I think that's over here. Yes, October 1st, outflows of 3,900 ETFs. That's the highest outflows we've seen since the 5K on September 3rd. Okay, so let's see what happens on the charts on October 1st, on or around October 1st. What happened on October 1st? This happened. Iran-Israel missile strike. We found a low at 60K and we rallied up to 64K, and that just happened. Okay, for like a 7-8% increase. So, I hope you're seeing the pattern here. Every time there is a high, heavy outflow day, you would think price would decrease from those days, but actually the opposite happens. Price actually finds a bottom and heads upwards from those days. Are the inflows actually funds to build their positions to sell to retail? I'm not really clear on your question. Are the inflows actually funds to build their positions to sell to retail? So the inflows are not necessarily to buy, but to build for us, you mean? You mean for us to build positions against? You could say that, yeah, for market makers. That makes sense, the way you say that. Yes. But what I want to put your attention to is like, don't think about it as they're going against us. Think about it in a sense of, because what I see out there on crypto Twitter, crypto YouTube is every time there's like a high outflow day, all you're seeing, or what I'm seeing out there is like, oh my God, it's gonna fall, it's gonna crash, it's gonna decrease from here. And then they make like a low target, like, oh, 40K next, 30K next, whatever. But instead, when we see those high outflow days is when the bottom is formed and price heads upwards. So I wouldn't say it's like they're going against us per se. You could say it that way and we get to the same result. What I'm saying is I think a lot of influencers out there and channels and whatever accounts, they are interpreting the data wrong. So, I mean, I agree with you. That was just my point. I think that a lot of people interpret the data wrong, and instead what you should do is the opposite. I'm not thinking even that far of like institutions are going against us. It could very well be, but I'm just keeping it as simple as and being like, hey, you would think, or the masses want you to think high outflows equals price decreases, but actually high outflows results in price increases in the actual prices, in the actual charts. And the opposite is true as well. Where's August? August 3.7. August 2nd, 3.7K outflows, 3,700. And yeah, you're going to see the same pattern. August 2nd, where are we? Oh yes, it was this long wick day. So it wasn't exact. August 2nd was back here. But shortly after, on August 5th, we did get that super low wick day, dropping just below 50K before we rebounded. So, like I said, just do the opposite of the masses at these turning points. Yeah, so now let's look at the inflows. Let's see, high inflow. Let's start at September. There was another day. Where was it? Oh, here it is. September 27th. 7.5K inflows. Okay, so 7,500 ETFs bought that day. Want to guess what happens in the actual BTC charts on September 27th? this day right here, forming a top before we drop. That was the highest price in Bitcoin since back in July. Highest since back here. Here in September, it was 66K. And then we got the high inflows that day, and then price just fell. So it did the opposite of what people are expecting. And then let's look at this day. Around here. The next highest inflow. Okay, here we go. July 22nd was 7.2K. 7,200. July 22nd was that area I just showed you. July 22nd, right here. So it's not exactly the top dates because we actually get another top over here. But I think you can see, again, the point and the pattern. High inflow day, and people think, oh, hey, high inflows, institutions are buying ETFs. Oh, price is gonna go up from here. But actually, it makes a short-term peak and falls. Right? Isn't that crazy? And then the last one we'll look at is this big, huge one. June 4th, huge spike. June 4th, 12,600 ETF inflows. And then June 4th on the charts, where are we? Right here. June 4th. And then we get a high on June 5th, 6th, and 7th at around 70, 71K. And yeah, this was actually the second top forming a double top. First top May 21st, second top June 5, 6, 7, and then we dropped. So you can see we're seeing higher ETF inflows that lines up with the tops in BTC prices before prices just fall to the downside. And so in summary, once again, just do the opposite. Okay, following ETF inflow and outflow data, thinking that, oh, high inflows means price increases, and that high outflows means decreases, it's going to get you wrecked because the market actually does the exact opposite, as evident from the 6 or 7 or 8 examples I just showed you from just the last few months. Remember this, everyone is buying at the wrong time. Everyone is buying at the peaks before prices turn around and correct. Everyone is also selling at the wrong time. Selling. All the selling is done at the wrong times, just before price bottoms and heads upwards. Heads to the upside. So you can see now the same can be seen with ETFs. Huge inflows of ETF buying happens when price is about to peak, and huge outflows of ETF selling happens when price is about to bottom and turn around to the upside. So it's very, very weird, peculiar stuff in play out there. So don't fall for the narratives. Don't listen to what the loudest people are saying, what they say that are like the markers of a top or a bottom, because most of them truly have no clue. They're just seeing, analyzing, interpreting the data all wrong, and really it's as simple as doing the exact opposite of what this stuff shows you.